Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and today is a live video. And real quick, I wanted to say I am sorry for the very scary thumbnail. I changed the thumbnail because it frightens some people. So I'll do a better job of not frightening people with a thumbnail. And we're going to do the best we can today, guys, and throughout the rest of this year and however long I'm doing these videos to let the data find the deal. So we want to use the data to uncover the deals in real estate and purchase those deals, obviously. So we definitely want the data to find the deals. And here's a really interesting thing, you guys. And one of the reasons why I'm going to do this video today is there is a significant part of the nation and the country that had year over year price increases in real estate. So this morning, I want to talk to you guys today about that, because here's something that's a really big deal. We're not off the ride yet. I don't know why people think that we're off the ride. And by ride, I mean quantitative tightening. Okay. So the Federal Reserve is still doing quantitative tightening. There are still things behind the scenes that are going on that we know nothing about. So in other words, you guys, we're still not off this ride. And to say that the housing market is no longer crashing, to say that the housing market is rebounded is, in my opinion, you guys, and just again, I've been through a lot. I've already been wrapped up in this one time. It's a bit negligent. Now, I understand that different parts of the country are doing different things, but nevertheless, there are red flags everywhere. We have systematic failure going on. And to purchase in that type of environment puts us in risk. It doesn't, some people will be okay. Some people have a lot of money, can weather the storm for maybe 10 years, and that's fine. But really, again, remember why my channel exists, okay? Specifically for first-time homeowners and preparing you to purchase real estate. At the end of the day, each of us, all of us, has to make an individual decision on when it's right for us to purchase. And one of the things that I'm doing to help you guys lean on me and to understand what my intentions are, I'm putting my money where my mouth is and I'm renting myself. Here's the thing, you guys. I will buy a house tomorrow if I can find a great deal on a house that I love. I am not trying to time the bottom of the market, but I'm also not trying to catch a falling knife. I'm trying to do the right thing for myself and for my family, and I'm trying to take you guys through that journey with me. And the reality is, quantitative tightening is still here, right? That hasn't changed. Interest rates are even higher than they were last year. So it is really, really interesting, though, and something that we want to look at as far as, the buying demand. Here's why I'm not concerned necessarily yet about buying demand. The primary reason, y'all, is buying demand has always been strong. The fact that we have pin-up buyers on the sideline, that's nothing new. We've always had pin-up buying demand on the sidelines, okay? The problem that happened is the floodgates of the demand were released. And essentially people that, in a normal situation couldn't qualified over the last 2 years. As a result, 2% interest rates, guys, come on. And the stimulus is like a down payment. The down payment is one of the biggest challenges for buyers, is having the money down. So that's all stopped, right? And I think what we're seeing here is we're still seeing migration. We're still seeing people move. But quite frankly, you guys, and I've told you guys this, and this is still my opinion, and I know this is just my opinion, but buying real estate right now it's going to put you in a risk box. Is it possible you'll be okay? Yeah. Is it possible that things just rebound magically right now? Yeah, that's possible. And that's why I keep telling you, I'm just a normal person. You have to make your mind up. This is how I'm living my life. This is how I'm looking for my house. And the thing is, guys, I live in Texas, and Texas has some of the most evident price crashing and overall crashing in the nation, right? Other than Northern California, of course. And I'm still, holding up for a couple reasons, right? Primary two reasons, obviously unaffordability, and that's really what I'm looking at, is the prices. But also, I can't even find anything I love. And I had the option when I converted my primary residence to a rental back in 2021. The thing is I actually tried to buy a house. Mid 2021, I tried to buy a house. I didn't want to have to rent. The thing is, guys, back in 2021, there just was no houses. It was complete trash. So when people are like, oh, Travis, you should have done this, you should have done that, I couldn't. I tried. 2021 had no inventory, and the inventory that they did have was trash and massive bidding wars. So for that alone, if I compare to where we're at right now, compared to where we were at, we're in a much better situation overall. Unfortunately, what we want to see, y'all, is we want to see more inventory. So today, I'm going to go through all of that stuff. And I want to also say this, happy Tuesday. And also, you guys, I'm getting too old to do this. Y'all see the video where that construction dude was like all mad at me? Y'all, I'm too old for this. I don't want to have drama and problems. Just want to get in, do my job, and leave. And just real quick about that video, I'm just going to chalk that down to that dude was having a bad day. He actually emailed me before the video. The guy found me. He emailed me before the video, and he was like, Travis, please. He was absent an apology, but he basically apologized in so many words. And he's like, please don't put my face in there. Please don't put my name in there. And honestly, guys, that's why I didn't. I didn't put his face. I didn't put his name in there because he reached out to me as a man. Even though he bullied me, he realized his mistake. And that's why I removed those things. And I also removed what was said as far as the reason that they didn't want us to film, which I honestly, y'all, if I blew the lid off of that, geez, I'm going to call a media station. I mean, the whole situation, shocking. It was a shocking situation from a rep at Lennar. It's just unbelievable. Anyways, so that's why I did that. He reached out, and I wanted to show him mercy. I don't want to risk his job necessarily, right? I don't want to add to job loss. I just wanted to get in and do my job. But that was really crazy. That guy kind of went off on me. I do have a Blackstone video coming out later today. You guys watch the Blackstone video. Blackstone is actually in, I don't know how else to say this, but Blackstone, the number one real estate investor, number one institutional investor, is having a mortgage default crisis right now. So we already know commercial lenders and commercial real estate and investors and developers are losing. So we already know that. So Blackstone has actually defaulted, y'all, you ready for this? On over $1 billion in debt right now, commercial mortgage-backed securities. So watch that video. That video is coming out tonight. And another thing, Blackstone has already stopped bank runs. People were trying to do bank runs at Blackstone. You guys, the other problem is our media is so weak, you guys. So I'm going to show you what we're going to really go in today. We're going to start here, you guys. We're going to start looking at the 10-year versus 3-month Treasury consistent. The reason why we're going to do that is I want to, a lot of people get confused why I'm doing what I'm doing. The first thing is because I've lost everything already. Okay, I've had a foreclosure, bankruptcy, and repo. I don't want people to go through the same thing, but I'm also playing history. I'm just playing the odds here. That's it. I'm not smart, y'all. I've been through a lot. I have logic. I have common sense, but I'm just playing the odds. The recession is evident. We have so many economic indicators that are saying, hey, everyone, we actually are headed for recession, and there is a much more pain to come. I'm just playing the odds. And then I'm also saying, hey, when homes go up 40% in equity in about 2 years, that creates a shallow, hollow foundation of that price growth because that breaks fundamentals. And then if we ask ourselves, why did they go up? Was it because of fundamentals? No, it was because of money printing, not because people earned it. It was because of money printing. It was because of COVID. So you guys, I'm just playing history. I'm just playing data, right? That's it. There's nothing special to the reason why I'm saying things, okay? And I am hyper cautious because I lost everything and I was depressed for, 9 years and I had to be forced to the sideline and I got to watch other people become millionaires while I was depressed. And I don't want you to go through that. So anyways, and then I'm going to come take you guys over here. Now, this is really, really cool. I think you guys are going to love this, you guys. This is this is SnapForce. You guys don't need to do this. This costs a subscription, but this is higher inventory levels today versus pre-pandemic. So I wanted to show you guys where in the nation that we have more inventory right now than we did pre-pandemic. So again, I'm going to show you guys areas where we already have more inventory than pre-pandemic. You guys, the crashing takes time. The interesting thing about this crash was the slight rebound right now. There is an uptick up. That's actually very intriguing. So we'll watch that. But nevertheless, things are starting to change. And then I'm going to take you guys here. This is a really good article. This is from Fortune. You guys are really going to love this. This is going to go over and we're really going to confront things like this, the 1 month change in prices. And if you guys look here, you're going to see a lot of metro areas, you guys, that actually did go up. So we're gonna attack that. We're not gonna be afraid to discuss anything on our channel here. We're gonna discuss everything on my channel, even if it's not what we want to see, because again, we're not about time. I am not, and I hope you guys are not about timing the bottom of the market. I just, again, and I'm going to say this up front, there's a few things that personally now that I'm waiting on before I go back into buying a house. Nevertheless, I'm looking every single day. Okay. I'm looking every single day. But as far as like advising and things like that, you guys, we need the confirmed recession. Okay. Number two, we need the Fed to pivot. Number three, I'm going to get past the spring and summer inventory dump, because when we have that inventory dump, that's when we're really going to get a better idea of what's going to happen next. Just like last year. Same thing last year. When we had the inventory dump, what happened, you guys? Straight down. Prices went straight down, right? So it's going to be interesting to see that. Now, I'm also going to take you guys here, and we're going to talk a little bit about the rental market as well. This is very, very interesting. We actually have year-over-year price decline in the rental market, which is really, really, really surprising. So it's no question. There's a lot of things happening right now around the United States. And the amazing thing about it is uneven. There are things happening in some places, and the exact opposite are happening in other places. So again, I really want to talk about this instead of be fearful, instead of point the finger. We just want to figure out what's going on. And what I'm trying to say is there are so many red flags. There are so many systematic failures right now. It's just, I'm not personally going to allow myself and my family to jump in purchasing real estate blind. I'm not going to do that. I've already done that. I've already purchased with my emotions. And honestly, guys, here's the thing with real estate. Sometimes it's okay to purchase real estate with your emotions. When we're in a normal environment, generally real estate basically just goes up. So by all means, be emotional about it. But right now, to purchase real estate emotionally, I mean, come on, guys. I mean, everyone's starting to get it now. I mean, you're going to be locked in your house. You're going to be locked in your house. Even if your house value goes up, remember, it costs up to 8% to sell your house. Y'all remember that? So it costs 8% to sell your house. But anyways, guys, those are the things that we're going to go over today. Let me show you where we're at with the 10-year Treasury. 10-year Treasury is down 1.5 basis points, so it's barely down. This is very important to watch because this tracks, obviously, mortgage rates. Take a look at the mortgage rates right now, you guys. You see that? Look at that, 6.61%. 6.61%. A lot of people are freaking out right now. So mortgage rates are over 6.5%. More than likely, this is going to go up because the 10-year also went up yesterday. So I suspect this to go up to about 6.7% when it updates today. It has not updated yet. But again, more than likely, the rates are going to go up once it reports today. So keep your eyes on that. Now let's take a look at the stock market. And I know I don't cover the stock market. And the reason I don't cover the stock market is all I know how to do is lose money in the stock market. But VIX is flat. That was actually up earlier. Gold, flat. Oil, everything's pretty much flat. Market's a little bit mixed. But anyways, guys, so we'll continue to keep our eye on, on these things. But now, what I'm going to go over with you guys now is, okay, here's the thing. There are certain indicators in the economy that are essentially warning signs, okay? Warning signs of an incoming recession. One of the big warning signs of an incoming recession is the inversion of the bond yields. And by inversion, this is what I mean. Generally, the longer the maturity, the longer the term of the bond, the higher the interest rate. For example, if I have a 10-year bond, generally that 10-year will pay me, hypothetically, say 4%. If I have a 1-year bond, a shorter term bond, generally that will pay me, say 3%. So it will pay me less. However, when the short-term bonds, the interest rates are higher than the longer-term bonds, that's called an inversion. And generally when it inverts, again, it is a signal of an impending recession. Now, anytime the 10-year has inverted under the 3-month and the 6-month, it's led to a recession 100% of the time. So that's why I'm trying to tell you guys, I'm only playing the odds here. I'm only playing history, and history is telling us very clearly we have more pain to come. We have more pain to come. We are still on this ride. So I'm going to bring up a chart, you guys, to give you guys kind of a better idea of this. Let me slide into this right here. Okay. So here's the thing. All right. Here is the 10-year Treasury constant maturity minus the 3-month Treasury constant maturity. Okay. And right now, you guys, you can see here, we are way inverted. In fact, we have never been this inverted before. We're inverted by 1.61 or 161 basis points. Okay. So we have a massive inversion. Anytime that blue line goes over that under the black line, it's an inversion. All right. Now, here's the interesting thing. I'm going to pull up something else. I want to show you guys this real quick. Let me show you the interesting thing, if I may. Now, okay. First of all, historically, based on just the inversion, okay, we have a 100% chance of an incoming recession. But here's the question that I have. We may not even be in the recession right now. You guys probably know that I made a video of, I don't know, before the start of this year. And I'm like, you guys, we're probably going to have the start of the recession Q1 and Q2 of this year with the confirmed recession in Q3 of this year. The reality of that is we may actually not have negative. I think we still are, okay? But we may not have negative GDP Q1. We may not have our recession until Q4, or at least confirmed recession. We may not even be in a recession right now. Personally, I don't know, because I think we are. It's just so frustrating that they keep changing the data. They keep changing the data, guys. But I want to show you something that's very, very interesting here, okay? Now, going back to the 10-year versus 3-month Treasury constant. Now, I want to circle all of the times that we've been inverted, okay? So let me do that for you now by turning on my pen. So here's an inversion right here. Okay, so it inverted right there, and that led to a recession. You guys, okay, I am so sorry. Boom, there we go. Sorry about that. Okay, so it inverted right here. This is in the 1990s, and this gray vertical line represents a recession. I'm not sure how well you can see that, but that arrow right there is pointing to the recession. So again, it inverted right here. Okay, led to a recession. Okay, it inverted right here, also led to a recession. All right, and look at how inverted we are right here. This is where we're at right now. So that's where we're at right now. But also, I want to point out another thing. Okay, let me switch this to red. Now, this is interesting. Now, very, very interesting. We didn't start the recession until the inversion went above. Do y'all see that? Let me change this again. I can't change the color. Why can't I change the color? Okay. So the inversion went above negative. Do y'all see that? Before recession. So it went above here. So the last 3 recessions, the inversion went positive before we hit the actual recession. So I'm wondering, will that same thing happen here, given how low we are right now? So will that have to go up? Do y'all see what I'm saying? Will that have to go up before we actually do have that confirmed recession? I think that's possible. It's hard for me to imagine that we're not going to have negative GDP this year in Q1, because look at all of the layoffs. And I'm talking like Walmart, Amazon distribution centers. I mean, there is a lot going on right now, but yet the craziest thing, the unemployment rate went down. Y'all, the unemployment rate went down. Here's the thing, okay? Say I'm wrong. Let's just say I'm wrong. And house prices just continue to go up. That's going to create what? What will it create if house prices continue to go up? It will create an additional round of inflation. If we have an additional spike in inflation, which we're probably going to have, it. What's going to happen, you guys? What will the Federal Reserve do if we have another round of inflation? What are they going to do? They're going to do another round of quantitative tightening. If they do another round of quantitative tightening and we have to start over, talk about big time problems. Big time problems. So remember this. The housing market accounts for a massive portion of our economy, I think up to 19%. And shelter accounts for, I believe, about 40% of CPI. If inflation doesn't get better in the housing market, they will continue and go back to significant rate hikes. I mean, they've said it that's going to happen, right? And a lot of people are afraid of that. And Paul Volcker. So a lot of people are afraid of that, you guys. But anyways, I just wanted to remind you that we are still heavily inverted. And that is one of the leading indicators on an incoming recession. So I want to make that clear. Okay, we're not out of the woods. We are still on this ride with the Federal Reserve doing quantitative tightening, essentially sucking out the money out of the economy. And honestly, they're doing that very successfully. But the thing, again, very astounding thing is it basically rebounded somewhat in some metro areas, and we're going to go into that part of the video. But really what I want to start now is, what do I want to do? I'm going to do this real quick, you guys. I'm going to go like this. All right, what I want to do now is I want to talk to you guys about, you should show the Fed chart on the national lending trends on national, So another thing, y'all, that's very, very interesting is the fact that, give me a second here, what's very, very interesting is what Johnny's saying. So I did a video yesterday, you guys, about the excess savings being depleted right now and basically being lower than debt. So debt has actually finally gone over excess savings. There is a tremendous amount of excess savings still. But let me show you guys this next thing real quick. Let me see how I want to do this. I think I'll just put this right here in my map, okay? This is really, really important. Again, so we're starting with the good stuff, okay? We're starting with the good stuff. If you're like me on the sideline, you want price crashes. One of those things being, hey, we're still in recession trends, right? We're still quantitative tightening. We're still inverted in the bonds. But here's the other beautiful thing. You know, regardless of all the noise, what I'm saying, what other people are saying, the data is showing us what's happening. And the astounding thing is there are several metro areas you guys can see here that are above pre-pandemic levels. That's right. We have active units. I'm talking about active listings, not months of supply. Actual unit amounts. All of the places you guys see here in blue now have more active inventory than pre-pandemic. And this is exactly what we need. This is the end result, is the inventory, right? What's the first thing? Prices. Second thing, sales, new construction. Third thing, prices. I'm sorry, the first thing was rates. So it's rates, sales, new construction. Number 3, pricing, which is what we want. But ultimately, number 4 is inventory. So the quantitative tightening is working. We now have more inventory than we did pre-pandemic. And this needs to spread. It does need to spread, right? This is what we need in like St. Louis. But you guys, it's working, okay? Now, I'm sure a lot of people have never heard of Pahrump. You guys impressed that I could pronounce that? Pahrump, Nevada. I actually had family there, but Pahrump is 30% over pre-pandemic inventory. Pahrump, Nevada. I know you guys, again, probably have never heard of that, so it doesn't really matter. But here's another one. What is this? Klickitat? Klickitat's 13% above pre-pandemic. The Delhi's, 8% above. So, it's changing, all right? Look at this. All over here as well. There's Salt Lake City. Salt Lake City has 23% more active units than it did pre-pandemic. Do y'all see this? Ogden, same thing. Okay, I think where's Salt Lake City? So all over the place. Idaho Falls as well. Now look at Texas. Texas is doing good. Texas is doing good, right? 71%. Here's Austin. Austin has 50% roughly more active units than it did pre-pandemic, January 2019. And this is a January to January comparison, you guys. So this isn't January, or this isn't April to April. This is January to January. Zillow, unfortunately, lags with the data. This is a Snap Force as well. I'll throw that in the description. This is by RJ Talks. But another thing I wanted to show you that I felt was interesting is look at Florida. Florida, which has been so stubborn, is finally appearing to start to break. Even though it appears some trends have reversed and then reversed back, Florida, however, is being left behind. Thank goodness. So you can see in Florida, Panama City, 30% more inventory than pre-pandemic. Again, Panama City. And then it looks like some places down here as well. Glades County, as well, unfortunately. And here's one as well. So that's it. Not a lot of places in Florida, but it is refreshing to see that. It is working. Charlotte's on the board, you guys. So it's working. The question that a lot of people should be asking is, and here's really the question. Will we be in quantitative tightening long enough for the housing price crash to affect way more areas around the nation on a more permanent basis? Right now, a tremendous amount of metro areas, depending on the data source, every metro area, depending on the data source, had price decline, but it only lasted for 6 months, would you guys say? About 6 months. So again, I think what we really have to do is get through these seasonal trends of buying demand. And I don't even think that the house market's going to make it through the seasonal trends. But once we're through that, I think we get our second round of price decline. I think the well-qualified buyers need to be slammed a little bit more and unfortunately need to shackle themselves to the house. But nevertheless, we still have inversion of the yields. And the other thing is we now have several counties. Again, we need more, but we have several counties that have more inventory than they did pre-pandemic. That is an amazing thing, you guys. That is a huge deal. All right, I'm just saying that's a huge deal. But let's talk about the scary stuff. I want to talk about the scary stuff because some of this stuff does not make sense. Okay, let me throw this up here. This is a fortune. You also have to have a subscription to this, but you guys don't need to spend money on the subscription. You can just watch this video. But I'll link those when I'm done with this. I'll link those, to this video. And you guys, what's really messed up? I was supposed to do timestamps on here because I get like people, please do timestamps. So I'm gonna do my timestamp here on the Fortune magazine. All right, here's what we're going to go into. Booming Scranton. When I think of Scranton, it makes me think of the Michael Scott Paper Company, not Dunder Mifflin. Michael Scott Paper Company. I don't know about you guys, but I, for one, want to be exactly like Michael Scott. When I was a boss and running several branches, I don't know if I told you guys that. I used to run several mortgage branches. I would always try to be like Michael Scott. Anyways, booming Scranton, falling San Jose, the latest home price data for the nation's 400 largest housing markets. This is going to be really, really good, you guys. This is going to be really, really good. It's going to put things in perspective because this is really, really intriguing stuff here. Let me move my picture out of the way here. Let me see if I can zoom in for you guys as well. This is really, really good stuff here. You guys should really like this. This is going to show us where home prices actually have gone up month over month. It's really important to understand this. We don't want to be blind to anything. Again, even if it's not what we hope to happen, we don't want to be blind. We can conclude and formulate an opinion, but we don't want to be blind. By the way, good morning, everyone. Cindy, Johnny, Kim, everyone. Jeff, I see you. Jeff, you made it. Johnny, where's Vital, Johnny? Jeff, Nikki, where you been? Nikki, it's nice to see you. Don't move. Love you, brother. Melissa. All y'all living in Omaha. We got living in Omaha. Living in Omaha. What's up, man? Juliet. Oh my gosh, I love you guys. All the usual suspects. Love you guys. My man Wolf. What's up, Wolf? All right. Anyways, you guys are going to love this. This is really, really important. It's going to show us the areas where home value did go up. Let me read this. An updated analysis of Zillow Home Value Index data. And I want to say that this home value index data is their own algorithm. It's not median sales price. It's not comparable data that has sold. It's their own value index that they've made. And that's a pretty, big reason why Zillow doesn't show as much price decline as, say, Redfin or Realtor.com. But it finds that just 23%, and I'm thinking already, what do you mean just 23%? Of the nation's 200 largest housing markets saw month-over-month home price decline in March. Okay? That share has swiftly declined over the past few months. So here's what I want you guys to take from this little part right here. We still have 23% of the metro areas with price decline. So this is not a total recovery. We have not hit the bottom, at least in every metro area. We still have parts of the country, several parts, 1/4 of them, experiencing a housing market that is crashing. So again, I say to you, the question to ask is when will that hit my metro area and how long, if at all, will prices go down? And what I'm telling you is it should hit every metro area. We are still on the ride of quantitative tightening. There are still things going on behind the scenes that we just don't know about. Now, is it possible that we have a soft landing and home values just go up from here? I guess that's possible. But more than likely, what will happen if home values continue to go up is it will make inflation worse. If inflation comes back, the Federal Reserve will tighten interest rates and credit even more. That's a fact. So actually, we kind of want home prices to go up a little bit during this time so the Federal Reserve crushes us even more. Think about it. Just saying, that's a way to look at it, right? Go ahead, guys, buy these houses. Go ahead. We're going to get crushed. Or it's possible. I'm not a future. I can't read the future. All I'm saying is this. Listen, be safe with your money. Just be safe with your money. Okay? Just be safe with your money. Let's keep going. Okay, take a look at this, you guys. Now, we're at 23% right now, so 23% decline across the nation. At the height of the housing correction, I'm just going to say crash. If that upsets you, I'm sorry, but get over it. At the height of the housing crash in September of 2022, 79%. So we went from 79% to 23%. So 79% of the nation's 200 largest housing markets saw month-over-month price decline, and that went down to 76% in October, and then in January 47, February 38, and now we're at 23. So the trends are starting to reverse, and that doesn't mean that that we hit bottom. Okay, it doesn't mean that rates. I just showed you guys interest rates as well. We are an interest rate sensitive market right now. Also price. Okay, I'm just saying price and interest rate. But interest rates, y'all, are probably going to be 6.7% by the end of today. I'm just saying. All right, just think about that. Here's what I want to show you guys. Let me get through this, and I'm going to show you guys some cool stuff here. This is zoomed in too much. I'm sorry about that. Okay, and I'm sorry, and I'm going to take Q&As here in a minute, okay? However, heading into 2023, the free fall in transactions has stopped while price corrections are waning. So again, they haven't stopped. The price corrections haven't stopped. They have reversed in many metro areas. And again, I would say I'm wrong. If we were out of quantitative tightening, we're still on the ride. You guys, we're still on the ride of quantitative tightening. How is the housing market recovering? How did we hit bottom when we're still in quantitative tightening? Whatever. All right, so what happened? The average mortgage rate, 30-year fixed rate mortgage, came down a bit from 7.37 in early November. Dang, did we get to 7.37? To 6.5% as of Friday. Just as we enter the seasonal spring period when housing demand increases. Do y'all see that? Housing demand increases this time of year. So it makes sense. But as a result of the limited inventory, all of that rush of buyers, it again, I don't think it's a big a deal as people are making it out to be, but nevertheless, we're still going to go over the data because the data is important. Additionally, some home price decreases coupled with inventory remaining tight has helped to stabilize the housing market in many parts of the country. Cue fewer home price cuts. I think, again, this is just the second inning. Okay, here's some interesting stuff. Unlike the 2008 era crash, this time around, we neither have a whole bunch of inventory nor a subprime crisis. That said, housing affordability or lack thereof in 2023 is similar on paper to the height of the housing bubble. Similar on paper, I'm going to say that's similar in reality. Raise your hand if you're like suffering right now from unaffordability. I am. I mean, things are super inexpensive, but another thing is the inflation is way higher. Another thing is we can't really do quantitative easing. Okay. Another thing is the world's not going to buy a whole bunch of dollars to bail us out like they did in 2007 and 2008 and 2009 because they want to get rid of the dollar. So there's a lot of worse things happening right now versus 2008. But again, we don't have the foreclosures, we don't have the inventory, and we don't have the job loss yet. So what do you guys think is going to happen when we actually do have like significant job loss? Probably what's going to happen is the housing market is finally going to like melt down everywhere. But take a look at this, okay? This is crazy. I'm going to tell you all right now. All right, some people are going to have to sit down. Let me move my picture out of the way here. Okay, I'm going to tell you guys what this is. All right, I'm going to tell y'all what this is here. I forgot to do something real quick. I want to do something. Now, what you're looking at here is that's the 1 month change in home prices, okay? So that's a 1 month change in home prices. This is why everyone's like, oh my gosh, and I get it. It is pretty scary. All right. Okay, here we go. Boom, got that. All right. Now, look at this. So again, we still have 25% of metro areas showing decline. All right. But take a look at this. Everywhere in blue from only a month over month basis. Okay, that hardly is a trend. I want to make it through summer and spring. I want to see it's a summer and spring. And this is not going to keep pace. I'm telling you, the unaffordability, excess savings is drowning. Excess savings is tanking right now. Consumer credit card debt is exploding. Debt's exploding. All of this stuff. But nevertheless, you guys, look at this. Look at this. Okay. Crazy. So everywhere in blue, home prices went up month over month. It's really, really amazing. And I also want to point out, take a look at this. Here is the shocking thing. Florida is starting to reverse the trends. Do y'all see this? Oh my God, my timestamps. Okay, no. I'm still good, Cindy. Thank you. But look at this. So we have all this whole area right here that's starting to show a quote unquote rebound, even though I don't think it's a rebound. I think this is temporary. I think it's a trap. Let's just call that a bull trap. So I'm calling that a bull trap right there. But look at Florida. Are we finally starting to see Florida, unravel here? Has unaffordability finally strangled Florida so much that people are not like migrating there as much, not buying houses as much? Are we starting to see people sell second homes? Are we starting to see that? Look at this, guys. Florida is finally keeping up with Texas, Nevada, Arizona, and California like it does normally. It took a while. Do y'all see that? Isn't that crazy? So while a lot of the other metro areas, look at guys, a lot of the other metro areas have rebounded. However, Florida, which has been so stubborn and so strong, has not. It has not rebounded. It has gone reverse. It is declining. Isn't that just really, really amazing, you guys? I don't know. To me, I'm amazed. Okay, maybe I'm amazed really easy, but let me show you guys this. Okay, let me show you guys this. Here's what's interesting. Let me go right here. Okay, so here's what's interesting. I'm going to tell you guys where I think that the price decline is going to be like the hardest. Okay, so in this area right here, let me go like right here. I think pretty much this area right here. That's going to be, in my opinion, right there that I highlighted in the country. Personally, I think these areas right in here are going to be the hardest areas to show price decline. Okay, so I don't think that we're going to be able to see a lot of price decline there, you guys. And one of the reasons is let me show you something real quick. Okay, I'm going to show you something. So remember that area that I just showed you. I want to show you one of the reasons why I believe that new construction is going to lead price crashes. I think we have proof of that now. I think we could pretty much say that if you're in an area full of an abundance of new home construction, that you are going to experience price decline and a significant amount of price decline. But I want to show y'all, take a look here. How do I want to show you guys this? I'm going to do it like this. Okay, look at this. So this is Lennar's website. This is where they're building. And if you notice, look at this. You see that pocket that I circled? Look at, there's no building going on in that pocket either. At least from Lennar. There's building. I'm just saying we're only using Lennar. But look at that, okay? Do y'all see how that area where there's no new construction? Look at, I'm gonna like this. I'm gonna show you guys. Actually, hold with me a second, okay? I'm gonna go back here and I'm going to do this. Okay, do you see that? So this area right there, and then look at this. See? See? Do y'all see what I'm saying? So if you're in one of these areas, and Jeff, I know that you're in one of these areas, brother, it really sucks. I know that. If you're in one of these areas, it's probably going to take more systematic failure. It's probably going to take more systematic failure. I hate to say it, but it will probably take more systematic failure in those areas that have almost no new construction. New construction is so important. New construction leads the housing market. And I've been talking to Jeff. You guys know Jeff's my friend. I love Jeff. Jeff called me when he left an open house. I think it was this weekend, Jeff. I'm not sure. Just tell everyone when it was. But Jeff was like, Travis, I got to call you. He went to an open house where there was like 40 people. The people were bidding like $70,000 over this house, like 15% over the asking price. So I'm like, what is wrong with these people? So I may fly out to the St. Louis area, you guys, and I may do videos of, around the nation where it's actually the exact opposite of trends. And if I go there, I'm going to put my one rental at a time hat on, man. I'm going to go undercover and I'm going to talk so much smack in front of those open houses. And I'm going to ask people like, hey, is this a good investment? Like, what do you look for when investing in real estate? Overpriced houses because you found it. But anyways, very, very interesting. So I think that, again, even though, and hear me out here, even though the areas that I showed you guys, let me show you guys again. Okay. Even though these areas that I circled right there, here's the thing with that area. Okay. Those are still unaffordable. Most of those areas still went up a significant amount, breaking fundamentals on a foundation that is hollow and fake, which is money printing, quantitative easing. So even though I'm saying that we need a lot of new construction and that's going to help us, even though those other areas are not saying that, you guys, unaffordability is going to cripple people, the natives, the locals. So I still think it's going to happen. But I'm saying this, I think that's why we see such a drastic difference in price decline, because most of the areas where there's price decline are experiencing a few things. Number one, excessive new home building, or number two, migration out. And then we ask, why is the migration out? Job market and crime. That's what we're seeing right now. We're not really seeing any areas per se start to unravel only from unaffordability. You can make arguments out west, like in Seattle, for example. But The thing is the crime, right? That's what we have to take crime and homelessness into consideration. So, anyways, you guys, hopefully I wasn't rambling too much there. I'm sorry if I was rambling. You guys know this. I'm sorry. I'm going back to subject. So, anyways, here's the month over month house price change. So, this is what has a lot of people worried right here, you guys. But nevertheless, still, like I said, 23% are still declining. 76% is going up. But a big surprise here was Florida. That is a big shocker. Florida's starting to reverse back to housing market crash, as they should. Am I right? Just saying. As they should. Florida always crashes hard. So, it was like really surprising to me how long that actually took to crash. Now, let's go back to this article, and we're going to go into some more maps here. On a seasonally adjusted basis, only 23% of the nation's largest regional housing markets posted a month-over-month home price decline in March. Almost all those markets were in West Texas or Florida. Okay, so again, West Coast, Texas, Florida. Where's Arizona and Nevada at? Anyways, because Arizona and Nevada's in there. I don't know. Okay, including a monthly of 1.27% decline in San Jose. That's annualized out of what, 14% year over year. So San Jose may lose an additional 14 to 15% on top of the 20% already that they've lost. It's happening, y'all. But hold tight if it's not in your area yet, for obvious reasons. Now, meanwhile, 76% of regional housing markets posted a month-over-month home price increase in March. That includes a whopping 1.52% monthly jump in Scranton. And I think I know why. It's because a lot of people are moving there that purchase paper. And obviously, Dunder Mifflin is like the number one leading employer in Scranton. So obviously, Dunder Mifflin's doing really good. I hope you guys understand that I'm joking about that. Okay, that's just an office reference. Please don't do the hate mails that I get, you guys. Some people take things a little too seriously. Okay, now this map right here is the year-to-date change in home prices. Okay, so this is just year-to-date. So this is for what? The last 3 months. Okay, so this is for 3 months. So looking at this map, has the housing market hit the bottom? Is there no crash? The crash bros, they're just lying. They're just lying. Is the blah, 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 blah. Y'all, can y'all see the areas with red flags here? First of all, the decline is red. So do y'all see any red areas where there's decline? I'm not sure. Maybe I'm looking at this wrong. Okay, but there's red flags. It is crackling. Crackling? No, that's a fire. It is crumbling like a muffin, a stale muffin. But anyways, guys, look at the West Coast. So again, year to date change. So over the last 3 months, even though we did have that month over month, look at over the last 3 months. West Coast is taking a beating. I went to Riverside. I went to San Diego. Now, San Diego is down, but I don't think San Diego is down as a result of excess building. I think San Diego is down because of unaffordability. I went there. I was able to find a tremendous amount of inventory, new construction. I was expecting to find none. Okay, I found a bunch, but nevertheless, it's still down 1.4%, and they have a lack of inventory. So massive lack of inventory in San Diego, yet it's still down 1.4%. Y'all, that's called unaffordability. Here's Austin. Austin's down an additional 3% this year. Phoenix down 2.2%. Lake Havasu, I've been there. I don't know if you guys have been to Lake Havasu. It's super fun, especially you have a Sea-Doo jumping the ferry waves. I don't know if you've ever done that. Las Vegas down 3%. Riverside, again, is there. Seattle 1.1%. Boise 2%. But look at again. Here we got Florida. So finally, in 2023, Florida is finally starting to get price crashing. And here's the thing. We already have crashing in the housing market, just not prices yet. What do we have that's crashing in the housing market? Sales, transactions. That's been crashing a long time. That's crashing. We want price crashing as well. But look at Florida, you guys. Isn't this a sight, isn't this a sight for sore eyes? So everyone in Florida, hang tight. It's finally starting to change in Florida. Also up here as well, North Carolina, starting to see. And these are, if we annualize some of this, it would actually be times 4. Some of this is pretty good, right? So it would be times 4 annualized because this is quarterly. So it is not monthly, but very, very interesting. Look at Hawaii. Hawaii, Honolulu still down. So, let's keep going here. Y'all tracking with me. It's really important to pay attention to this because we're seeing quantitative tightening and we are seeing seasonal trends. Let me read this for you guys. Through the first 3 months of 2023, the biggest home price drops were found in markets like Austin, down 3.1%. I just got back from Austin, and Boise. I'm about to go to Boise, and Las Vegas. I already went to Las Vegas, and Phoenix. I already went to Phoenix, and San Jose. I'm about to go to San Jose. Boots on the ground. The biggest upticks, however, okay, this is interesting. Biggest upticks, Jackson, Tennessee, another Tennessee, Morristown, Tennessee, and Scranton, Pennsylvania. Insane. Those are huge price increases. So if it's me, I'm going to do research on those markets and see, is it the job market? Like, why are those markets going up? Is it still relatively affordable? Take a look at this. This is the map y'all love. This is the love map right here. If you're like me, okay, if your position's like me. All right, this is the decline in home prices since their peak. Again, this is from Zillow. Zillow is not using median sales price. They're using their own calculation. I believe it's a little too conservative, okay? But here we go. So there's no price crash. So again, to the people, there's no price crash. Well, there actually is. What's your definition? What's your definition of price crash, right? But anyways, look at this. Massive losses. Again, it always starts West Coast, really in California, Nevada, Arizona, obviously right in this pocket. And then obviously Florida gets hit. Florida's right here. So look at beautiful signs of Florida. Again, listen to me for a second. This is the peak to current, okay? But Florida has lost most of its value over the last 3 months. So Florida, again, is finally starting to change. That was really freaking me out. And again, remember, you guys, we're just in the first inning, but look at some of these losses. Boise's almost 10%. Again, this is Florida. Redfin is different. Seattle's down 7%. San Jose, 8%. Riverside, 4.4%. I've been to Riverside. I keep saying that. San Diego down a whopping 6.4%. And again, very interesting to watch San Diego. San Diego does not have an abundance of new construction. San Diego has overwhelming unaffordability, and predominantly from the overwhelming unaffordability alone, San Diego is going down. And that should be refreshing if you're in a metro area without substantial new home inventory. Look at Austin, you guys. Austin is down 9.5%. Y'all, I can't wait. Oh, by the way, I'm releasing my Austin video. You guys, I'm so excited. I'm so sorry. I have to tell you this. I'm releasing my Austin video on Wednesday. So watch my Austin video on Wednesday. I was able to find houses that were listed 30% under 2022 averages. So one of the things I'm trying to do now, and I realize that I've made this mistake, is when I give you guys the boots on the ground metro videos, I'm going to include a market analysis. We're going to let the data do the planning, do the conclusion. So I apologize. Some of my other metro areas, I was not able to do a market analysis, and I won't be able to do a market analysis for every metro area because in order to do a market analysis, you have to have access to the multiple listing service, and I pull sold properties. So I'm not looking at median sales price. I'm looking at actual sold properties. So again, I was able to find new construction in San Antonio that cash flows. Again, well, I got yelled at on that video. So maybe you guys missed the point. I try to keep the story going instead of veer off into some drama. But I was able to find new homes in San Antonio that cash flow. That's insane to me. New homes. And then in Austin as well, I was able to find a home. I'm almost done with the edit. I was able to find a home that was over 30% under 2022 values in Austin. And the craziest thing about that is there are no price cuts in the community. The only way I was able to determine whether or not they were 30% under is with the data, because the home builder was not advertising it. And now I believe they weren't advertising those massive price declines they don't want to freak people out. I think they're in much worse situation than most people realize. Again, that's just my opinion. Okay, let's go back here. Let me do this. Okay. So again, from peak to trough, here's massive amounts of decline. Obviously, again, this area right here. Okay. Like this area right there, not showing those declines. Look at again. So watch this area that I've circled. Okay. Look at how, whoops. Okay. I'm so sorry, you guys. I got to hit this button. And then hit this button like this. So sorry. But you guys see how that matches? So like this and that. See that little area? So this area right here, look at. not going up or not going down in value. And remember, look at Lennar. See the new home construction not in that area, not a predominant amount. Do y'all see what I'm saying here? Right? Y'all see what I mean? See? That's why I think what I think. I think we can say that. I think that I think it's safe to say that now. New construction will continue to lead housing price crash, quite frankly. Let's keep going, y'all. Let's see if there's anything else good in here. And then we're going to go over to the rent, okay? Among the nation's 400 largest housing markets tracked by Zillow, 182 are still below their 2022 peak price. So 182 under their peak price still. Of those down markets, home prices in 38 markets fell over 5% from the respective peak, including Reno, Phoenix, and Austin. Okay. Here's year over year change. Now, here is a data set that a lot of investors and realtors like to hold on to. It's looking at only year over year. Now, in my opinion, there's a lot of reasons why you shouldn't just look at year over year. You would have to wait a year just to see what's going on. But here's where we really see the housing market crashing. Okay, when it comes to year over year property decline. So it's really interesting to point out that if you look again, just only year over year data, look at Florida's not in there. Okay, so first of all, let's start at Florida. So Florida, again, this is what I'm trying to explain. I want to tell you guys is Florida has only recently started showing cracks in the prices of houses. That's recent. That's a new development. And that is a great development because it is a sign, it is a red flag. It is, it's something that I've personally been waiting for. But again, this is year over year, okay? Well, look at the West Coast, you guys. Doesn't it always start in California? You know what's crazy to me? What's crazy to me is there are people and realtors in California that are still saying the housing market is perfectly fine. They're not even warning people. And the thing is like, y'all are in the number one state of declining metro areas. What are you talking about? Now, I get not in every metro area. Like over here, according to this map, none of this is crashing. So if someone said, oh, the housing market's not crashing and you live in this area, okay, you may be right about that. But when we look at the big picture, well, I can say, well, actually it is crashing right here. But the reality is what, y'all? It's crashing in some places and not in others. And why is that? It takes time. That's what I believe based on history. It takes time, right? But look at that. So this is where we're at with year over year. Pretty cool, actually. Pretty cool. Colorado's on there, Look at this. It always starts out west. This is crazy. It always starts out west. Just saying, you guys, let's keep going and then we'll get into the rental market here. Okay, here's what's very intriguing. This is a crazy map right here. This is the remaining, take a look at this, you guys. This is the remaining pandemic housing market boom gains. So this is from March of 2020 to right now. So this is the excess savings. This is why people are saying, oh, the consumer's okay, households are okay. It's because of this data. This data right here is why the economists, the government is saying, we're okay. And this is why I'm also saying this map right here is why people can lose. Okay, if you purchase before 2022, okay, people can lose 10, 15, 20% in equity and still be okay. But if you purchased after 2022, if you lose equity, you're not going to be okay. Right now, we have two separate buyers in the US. We have buyers that purchased before 2022, and we have buyers that purchased after 2022. It is a completely different world. There is almost no similarity to home ownership. Think about it. But look at this, you guys. There is a lot more money out there. But what's really crazy, this is insane. I don't even know how to pronounce this. What is that? Thibodaux, Louisiana, has lost 5% from the pandemic. They've lost 5%. How the heck did they lose 5% already? Lake Charles has lost all of their gain and lost an additional 1%. So if you live in Lake Charles, it's a housing market crash. So, we're not having a housing market crash. Explain Lake Charles. Lake Charles has lost it all. Y'all hear me on this? Lake Charles has lost it all and more. It's a sign. It's a sign. But Florida has a long way to go. Look at this. Florida in the 50s and 40s. Jeez. Mid-40s and 50s, you guys. And 60%, my gosh. Look at how much house prices went up in 3 years. This is not sustainable. This isn't sustainable. Houston went up 35%. Houston is strong and stable. How the heck did Houston go up 35%? This is nutso. Austin, another, even though Austin's down double digits, it's still up 43%. Austin has more room to go down. San Antonio, dang, insane. A lot more room to go down here. Lot more room to go down here. Oh, what's up, Jeff? What's up, my man, Jeff? Where's Jeff at? Is Jeff at? Where you at, Jeff? Where you at, Jeff? Okay. St. Louis went up 32%. All right, so 32% in 3 years. St. Louis, that is breaking fundamentals. That's going to create massive unaffordability, obviously, right? But look at that, you guys. So this is the map that we really want to see start turning red. I say that, but in order for it to turn red, people got to get hurt. So I don't like that part of the equation. I don't like that people have to get hurt in order for us to win, but at least I'm not, leading people off a cliff to financial suicide, so it could be worse. So real quick, guys, let me take a look at the market. I'm going to show you guys where we're at real quick. So 10-year treasury is down 3 basis points. It's not a big deal. Mortgage rates have still not updated. We're still sitting at 6.61%. Market is now pretty much sideways, down a little bit. Gold actually went up. VIX is up now. So that's where we're at with all of that stuff. All right. So let's go now over to the rent. You guys, thank you for hanging tight with me. So what we're going to do now is we're going to go over the rental market, and not short term. We're going to go over long term. That was cold tea coming straight from the tea bag, which is disgusting. But I messed up right there. So one of the other, let's say, catalyst, if you will, that I've been predicting that will lead to additional price crashes. Well, first of all, I think it's new home building. And then I would say, secondly, it's institutional investors. I would say institutional investors and the rich having to liquidate or sell their houses in order to survive would be another one. Bigger than rental market, but long-term rental market appears to be unraveling, which is historically important because generally in times like this, the rental market goes up, and an overwhelming amount of investors purchased investor shares during the pandemic, hoping that the rental market would continue to do what it's doing. So being that there is a record amount of investor shares coming from people that don't have any business investing, I'm not talking about the smart investors, I'm talking about the foolish investors. They've been rug pulled. I'm telling you, they have been rug pulled. I have a rental. It's not all it's cracked up to be, okay? You got to pay money for expenses. You got to deal with, you guys, and I'm overly nice to my tenants. I bought my tenant like $300 gift card. Who does that to Home Depot? I'm not even going to go there. But anyways, the rental market, super important. Now, I believe the rental market is going to continue to unravel. It's going to continue to go down as a result of two things, unaffordability and overwhelming supply. However, I believe that trend will start to reverse probably a year to year and a half from now. And the reason I believe that it will reverse a year to year and a half right now is I believe that will be when we're towards the foreclosure wave. I think once the foreclosure wave hits, people stop buying, they start renting more so. So I think it's going to reverse maybe year and a half right now as a result of foreclosures, but I think it's going to continue to go down. All right. So let me pull this up for you guys, and we're going to read this very, very quickly. You guys have been on line with me for quite some time. I really appreciate you guys' support. Oh my gosh, I had a super chat earlier. Let me pull up that super chat. Texas, I'm so sorry, man. I got in the zone. Geez, I got a lot of comments here. I really appreciate you guys' comments. Really appreciate you guys. Even realtors, I really appreciate even realtors, especially the ones that they don't get offended by what I'm saying. They actually are learning. They're actually stepping up their data, analytics and things like that. Really means, actually, it means a lot to me to see that. Okay, so super chat. Don't move to Texas. My man, always taking care of me, always showing love. Definitely appreciate you, brother. I have appreciated you from day one. Here's some commission money in case the housing tries to lock you up. Oh, don't worry, we'll break you out. I hope so. Brother, first of all, thank you. That $5 is helpful. Unfortunately, not enough to fight a battle. Y'all, here's the thing. If let's just say this. If Lennar sues me and tries to shut me down, Y'all, I'm going to need your help. I'm not saying that we should picket in front of the courthouse about, hey, free Travis, leave Travis alone. But I'm going to tell you guys right now, I am not a rich person and they could definitely strong arm me. But I'll tell you also this, I did nothing wrong. But in court, it doesn't always matter if you've done anything wrong. It matters how much money you have and how long you can fight. So y'all better help me out if I get arrested. Not arrested, I'm sorry. Sued. But like, how do I get sued? You know what I'm saying? Like, I was getting bullied. Well, they're the billion-dollar company, so they could do whatever they want. So anyways, you guys better bail me out. I'm not joking. That scares me. Anyways, I'm too old for this. I'm telling y'all. All right. I don't want to get yelled at. Anyways, rental market tracker, U.S. rents post first annual decline in 3 years. I'll be fast, you guys, because it is getting late. The median asking rent fell 0.4% in March to the lowest level in 13 months. Austin, Chicago saw the largest declines, while Raleigh and Cleveland experienced the biggest gains. Here's what's really, really fascinating. Okay, this is basically showing where rents are. So this is the first year over year rent decline, and I believe in 12 years, I'm not 100% sure. We'll read that more. But look, it's not going down by much, but it is now under year over year. So it is happening, maybe not in every metro area, just like the price crashes, but on an annualized national level, rent is going down, and it's going down kind of at an alarming rate. Okay, it's untypical. The median asking rent in March was unchanged from February. It remained $322 higher, or 20% higher than than pre-COVID. So you can see there is no question it is going down. Rent has gone down. It also went down towards when we got out of the lockup as well. You guys can see that. And then it went up. So again, I think that this will continue to go down. And then once we hit foreclosures, it's possible that it goes up, just depending on how much inventory there actually is. There's a tremendous amount of inventory right now. Excuse me. Rents are falling, but it feels more like they're just returning to normal. Excuse me. Which is healthy to some degree. Okay. Where the median asking rent in March was 9.2% higher than it was a year earlier, it's similar to the cost of eggs. You can say egg prices are plummeting, but what's really happening is they're finally making their way back down to the 3% normal. So yeah, rent is going down, but a lot of people don't feel that because they're still historically high. Take a look at this. This is very, very interesting. I like this myself. Okay, take a look here. So here's the top metro areas with rent decline. Okay, so rents decline in 13 major metro areas. But what is this? Is this monthly or is this like year to date? Because I want to see what this is annualized. But take a look at this, guys. This is huge. Austin right now is experiencing mega signs of crashing, because not only are they crashing in their ownership department, they're crashing in a rental market. So Austin right now, you guys, double whammy. Austin is experiencing double whammy in the housing market for purchasing, but also in just really shocking rental market unraveling. To be down 11%, I don't even know if that's ever happened before. That's actually very, y'all, I know I've been calling this, but that's shocking. An 11% decline in rent. Jeff, I'm sorry, man. I want this to head out to St. Louis. I want this to head to y'all's metro areas that are not experiencing this. I'm not bragging, but I'm next to all these places, so I get to see it firsthand. Number 3, New Orleans, 3%, all the way down to San Antonio at 1.3. Look at Houston. This is where I live. Houston's number 12. I see this. Okay, so I have number 1, number 12, and number 13, all Texas. Huge investor demand in Texas, you guys, huge. Or we would have even more price cuts right now in Texas, but the migration is just so heavy here. And what we're not seeing is anywhere in Florida on here. We want to see areas in Florida. Obviously, Atlanta's on here. Atlanta, I want to go to Atlanta. Atlanta was one of the heaviest investor purchased areas in the nation. There were many zip codes in Atlanta that over 50% of the houses actually went to investors. So good, now they're paying the price for that. But take a look at this. Look at these rent increases. Raleigh, 16%. Cleveland, 15%. Charlotte, 13%. Indianapolis, Nashville. Nashville appears to be changing, but nevertheless, that's up. So this has got to be annualized. This is not month over month. And look at Jeff. I'm sorry, brother. Look at my man. Dang, this hurts me to see this on here. This hurts me to see this, Jeff. This hurts me to see this, brother. I hate it. I hate it. I love Jeff. I want him to win. I want him to do well. I don't want him to have a hard time. I want this to be easy for everyone. But it's not easy. This is hard. This is a hard situation we're in. But look at St. Louis now is up 4.2%. So we're seeing it, y'all. We're seeing changes. I think that's pretty clear at this point. The changes that we're seeing, it is what it is, you guys. That's your housing market update. Obviously, in conclusion, and I want to take a couple questions here, but in conclusion, no one knows what's going to happen, including me. No one has a crystal ball. I think it's important to change our attitudes and to change our opinions as reality starts coming into play, or rather as the dust settles. We don't want to be hung up on a narrative that we want to happen so much that we're blinded. So I want to let y'all know that I will not be blinded. If I'm wrong, I will tell you I'm wrong. And I will tell you when I'm going to purchase. I'm going to walk this entire thing out with, this entire thing with you guys, myself, when I purchase. And the other thing is I'm putting my money where my mouth is. And I've taken a massive income. People are like, Travis, oh, you're making so much money on YouTube. But the thing is, I have taken such an income, even with YouTube, you guys. I've taken a massive hit in income because I've gotten out of sales. So I hope you guys really appreciate that when I do get back into sales, because I have had to make so much sacrifices to follow what I believe in. And it is what it is, guys. So let me take some questions. So, a few things. Again, number one thing, there are many red flags. Okay, that's the one thing I want you guys to understand, that there's many red flags still. Number two thing I'm hoping you guys got from this is inflation could possibly return. If house prices continue to go up in most of the U.S., they're not in a lot of areas, but in most of the U.S., if prices continue to go up, it is possible we have a second round of inflation and a second round of quantitative tightening, which will absolutely cripple us. Okay, so that's another thing. Now, the third thing is as far as when should we wait? Again, I'm not trying to time the bottom of the market. There are a few things that I'm personally waiting on. Number one, recession confirmation. Number two, Fed pivot. Number three, inventory dump. I want to get through summer. I want to see all the inventory on the market, and I want to see what happens once we have all the inventory on the market. If we have a whole bunch of inventory on the market and it evaporates over summer, that's something that I'll be very concerned about. But if we have the inventory dumped during the summer and it's all still on the market, well, that's a sign of a continued housing market crash, okay? So here's the thing, you guys. In the meantime, all right, understand that we're still on a ride. We have not got off this ride. To say that the housing market is bottom or rebounded is not true, because we're still going through quantitative tightening and we still don't understand the full effects that's going to have on the economy. But we know it's having massive amounts of effects. The other thing I want you guys to realize is as you're on the sidelines like me, don't get depressed, don't get anxious, improve your purchasing power and be proud of yourself. Credit, income, assets. Use your market analysis to let the data lead you to a great deal. Now, other than those things, when should you buy? Well, probably when you find a deal that you love at a great deal. When does that happen? I don't know. I don't know what's happening in every single market. I know a lot of what's happening in Texas, okay? But I'm not willing to yet help people find houses in Texas yet. I want to desperately because I love it, buying real estate and investing in real estate, but I'm not going to do it yet. I want to, but I'm not. So anyways, you guys, that's the thing. Let me take some questions, about 15, 20 minutes of questions if you guys have any. Let me scroll to the bottom here. Oh my gosh, there's no tea in this. That's disgusting. That's just the tea bag with a little bit of the water in there. So John gets it. Patience is key, brother. You know this. Well, the thing is that I want to stay in Texas, man, but I'm just kind of at the point where I want to live by the beach in Texas. I want to live by the beach, man. I want to be able to go outside of my house and go fishing and just remember why I love life, right? Because this stuff kind of sucks. Thank you, guys. I know. I don't know why. Oh, is my feed breaking up, you guys? It shows that my feed is good. Let me know if my feed is breaking up. When do you think will be time to buy? So Ice Hot, I don't know, man. Different markets have such different trends. In my opinion, people should be increasing purchasing power and investigating their housing market. Now, there are three things that personally I'm waiting on, and I just told you this: recession confirmation, Federal Reserve pivot, and summer inventory dump. Because remember, when the inventory is on the market, if it just sits, those are going to be a lot of signs that we're doing the right thing. Okay, they just signed a 21 lease. I think they're going to have plenty of time out, 21 months, to find a deal of their dreams. I love Padre Island. Of course, I considered moving to Florida. I love Florida. Feed is good. Scrog, how are you? Kim, appreciate you. Oh, I want to do it. That's going to be some of my next metro areas. Is I want to interview these people that are lined up in these houses, like where Jeff's at. Travis, are you going to let us all live with you so we can save money and buy a home? No, Jeff, I'm not. But thanks for asking. All right, let's see what else is here. Y'all, I love Johnny. I think I said Jeff. Jeez, I love Johnny. So take a look at this, okay? So this is so there's so much confusion here. Let me talk about this comment real quick, guys. Owning is always better than renting unless you have a foreclosure. Like the millions and was it 7 million people the last time around? So, comma, unless you have a foreclosure, unless you have a crystal ball and you can see the future. So the thing is Dusty, we don't need a crystal ball. We already see price decline, and we know that the overvaluation. And what else do we know, sir? We know that interest rates are higher than they have been in 2 decades. So if you buy right now, you're going to buy just really a little bit off of the peak with interest rates that have never been this high in 20 years. During what, Dusty? What do we not have to guess? What do we not have to guess, you guys? Dusty, what do we not have to guess that's going on right now? No crystal ball needed. What is it? What is it? Quantitative tightening. Why can't people realize quantitative tightening is happening right now? For what reason? Dusty, what reason is quantitative tightening happening right now? What reason? Inflation. So Dusty, do you have a crystal ball? Do you know what other black swan events are going to happen? Do you know? For me, I don't know either, right? Neither of us know. The difference is buying a house and being chained to it. That's $100,000, sometimes $500,000, $250,000, $500,000, $1 million investment. So my thing is, Dusty, I know I don't have a crystal ball, man, but I've been burned hard. I've been burned, and I don't want other people to potentially, because I don't have a crystal ball, to be burned like me. And in my opinion, when it comes to the biggest, largest, most important transaction of your life, you don't want to do it when you're worried. All right. You don't want to do it when you're worried or uncertain or when there's quantitative tightening going on. And then all over the nation, there is price decline. But I will say this, Dusty has a good point. Renting is traditionally a bad idea. Okay. And I'm going to upset some people when I say this, and understand what I'm saying. I kind of personally, this is my personal outlook. I'm a professional. You guys can't blame me for saying this. Okay. I look at rent as almost like 100% interest. It's not. There's benefits of renting. You can be mobile. You're not going to be trapped in a house. You're not going to be chained. Okay. But there are so many advantages of owning, you guys. Dusty hit, home run right there. There's so many advantages of owning. But my point is owning at the right time is so important. Purchasing is such a huge transaction blindly and naive is not smart. It's reckless. We have the data. We have all of the proof now. But nevertheless, we don't want to be stuck on the sidelines. All right. So Dusty, I'm not saying don't get stuck on the sidelines, you guys. During this time of waiting, and we've only been waiting, at least if you've been watching me, for about a year. And actually we've won if we have been waiting. You want to improve your purchasing power. So here's the thing. First of all, I haven't been wrong. But say I'm wrong and everything rebounds. And say we don't have a second round of inflation somehow, which we will. But let's just say we don't. People that have been listening to me, Dusty, should have more inventory options, should have less bidding wars, more purchasing power, and more intelligence when it comes to understanding the market. Now, if I just said, just buy right now, no one has a crystal ball, and they bought, and house prices continue to go down, what happens? What happens? What happens? They're stuck. And when you're stuck in your house with an inability to refinance or sell, that's when the possibility of foreclosure happens. How do I know? Because I made that same mistake. Anyways, you guys, I'm going to end it there. I definitely appreciate you guys. Dusty, I appreciate that comment, man. I'm definitely not, picking on you in any way. I want you guys to know from the bottom of the heart, I love you and I want you to do well. I don't want anyone to get hurt. You have to make up your own mind. Let the data find the deal. And other than that, guys, I really appreciate you following along this journey with me. And if you're out there investing in real estate, I wish you luck and I hope you win. Even you, Dusty. Thank you, guys.